This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Herb Greenberg, who reminds investors that risk is real. With Herb Greenberg's Reality Check, researching stocks in terms of risk. You can learn more at TheStreet.com/realitycheck.
Reversal of fortune. Economic growth fell sharply in the first 3 months of 2014. So why are top economists and Federal Reserve policymakers so optimistic about the rest of the year?
Bidding war, what Hillshire Foods has that other companies are offering big money to get.
And pump up the volume. Does Apple need a new cool gadget to pump up investors to buy its stock now that the Beats deal is done? We have all that and more tonight on Nightly Business Report for Thursday, May 29th.
Good evening, everyone, and welcome. Stocks rose again today with the S&P 500 ending at yet another fresh all-time closing high, and the Dow within 17 points of its own record high. And this happened despite data showing that the U.S. economy actually contracted during the first quarter of this year. In a release that surprised few, a preliminary read on first quarter gross domestic product showed a much worse than expected 1% decline, with wicked winter weather getting much of the blame. But Wall Street was unfazed. Stocks got a big boost from a sharp drop in first-time jobless claims last week, which are now back at pre-recession levels. And there was also a modest increase in pending home sales in April. That was the second monthly increase in that statistic in a row. Now, stocks finished at the highs of the session today. The Dow up 65, the Nasdaq higher by 22, and the S&P 500 added 10 to close at that new all-time high of 1920. And benchmark Treasury yields inched up from yesterday's 11-month lows, with the 10-year trading at 2.47%. So what gives? Why are stocks at or near record highs after the economy shrank for the first time in 3 years last quarter? How different is the current quarter, and are economists counting on even more growth over the year ahead? Steve Leisman has more.
The unexpectedly sharp downward revision to first quarter GDP to a full percentage point decline actually prompted economists on Wall Street to grow more optimistic about the second quarter. On average, economists raised their forecast for the current quarter by 0.2 of a point to a strong 3.7%. The reason? The negative number appears to be mostly the result of harsh winter weather. The downward revisions came because of much lower inventories. Turns out businesses kept a lot less stuff stocked on their shelves in the first quarter, and they're going to have to restock now.
Part of that negative is the weather, to be sure. But if you think about what the bounce back's going to be in the second quarter and average that to the first, you still get a growth rate that's less than 2%. So I think that's a disappointment compared to what many people were thinking before, and it sort of is a continuation of this unfortunately slow recovery.
A big drop in unemployment insurance claims reported today to just 300,000 bolsters the bulls' case for near-term strength in the economy and the job market. The bigger question being debated is what happens after the bounce back, and the decline in yields for 10-year U.S. government debt to around 2.44% has some believing that the bond market is sniffing out weaker growth ahead.
I think the leading hypotheses are that, the fall since the beginning of the year reflects an appreciation that maybe the surge in growth we got at the end of last year isn't going to be sustained over the next couple of years.
Next week, investors think the European Central Bank could take additional action to stimulate their anemic economy. That could give a boost to U.S. growth and help make the bounce back more than just a one-off blip. For Nightly Business Report, I'm Steve Leisman.
Here's something else that some say could give the economy a lift, ending the decades-old ban of exports on U.S.-produced crude oil. A new report today has reignited the debate, concluding that such a move could create jobs and lower gas prices, putting more money in the pocket of consumers. Jackie DeAngelis has more.
Rising oil prices, more pain at the pump, leaving consumers wondering if the U.S. is ramping up domestic energy production, then why are prices so high? Traders say part of the reason is geopolitics, concerns within the global market over supply coming out of Libya, Iraq, and Iran. But a new study released by the IHS says that there is a solution, lifting export restrictions on U.S. crude, an issue currently being debated in Washington. Dan Yergin, the study's author, says that this would not only ease oil and gas prices, but also add nearly 1 million jobs to the U.S. economy.
It is time to lift this ban. It's pathetic, and it's another black eye for Congress that they think a 1973 policy is applicable today in 2014. And not only would this help produce jobs, but it would be a tax saving to the consumer.
Proponents of lifting the ban point to the study's findings that a total of $746 billion in additional investment would be generated from producing an average of more than 1 million barrels of oil per day between 2016 and 2030. That increase in domestic production would cut the U.S. oil import bill by an average of $67 billion a year. In addition, producing more crude would lower gas prices by an average of 8 cents. Added up, and it's a total cost savings of $265 billion over the course of 15 years for U.S. consumers.
If the export ban on crude was lifted, I believe the global prices of crude would come down because, remember, it increases the ease of availability. So right now we have crude trading at about 103.5. I think we could see that go down below, probably into the 90s. If we did, that would be the initial shock.
But for now, as Washington continues the conversation, prices remain high. For Nightly Business Report, I'm Jackie DeAngelis.
As for oil prices today, crude rose after government inventory report data showed a sharp drop in gasoline inventories, offsetting an increase in U.S. crude supplies. And to read more about the calls for the U.S. to end its crude oil export ban, go to our website, nbr.com.
Earnings out today from Sanderson Farms. That's the nation's third largest poultry producer, and the numbers were just ducky. Profits more than doubled last quarter. Higher demand for its fresh and frozen chickens as consumers switched from expensive beef to more economical poultry. Shares of Sanderson up 3% today.
Well, Sanderson's gains were small potatoes compared to shares of some other top meat producers. Shares of Tyson Foods up 6%. Hillshire Farms surged nearly 18%. And that's all because of a food fight on Wall Street, with two different food giants both making bids to acquire Hillshire Farms. And as Sarah Eisen reports, things are just beginning to get juicy.
Jimmy Dean's sausages never looked so good. Hillshire Brands is the company that makes them. It's also behind Ballpark Hot Dogs and Sara Lee Desserts. And right now, it is one of the hottest deal targets on Wall Street. Tyson Foods, the largest U.S. meat processor by sales and second largest pork producer, stepping in, offering to buy Hillshire for $50 a share in a deal worth $6.8 billion. That one-ups the offer from Pilgrim's Pride a few days ago to buy Hillshire for $45 a share. Clearly, Hillshire's portfolio, which also includes State Fair corn dogs, is in demand.
They do have some pretty nice brands in their portfolio. For example, Jimmy Dean breakfast platform that they have is a growing platform and has been doing really well.
Higher margins, established brands, and strong supermarket presence are all appealing. And as Tyson says in a press release, we believe that the strength of Hillshire's products in the breakfast category would allow Tyson to capture opportunities from shifting consumer trends in this attractive and fast-growing day part where Tyson has little presence today. Hillshire says it's thoroughly reviewing Tyson's offer. No question, the food business is hot right now for deals.
Both the bidders of these assets, Pilgrims and Tyson, have transformed their balance sheets over the last 3 to 5 years. And so their balance sheets are in much stronger position than they've ever been.
So what would the impact of all of this deal making be on the consumer?
If all the synergies that these companies expect from the deal actually come through, you would hope eventually that prices might even be lower to the consumer.
The next move may come from Pilgrim's Pride if it decides to raise its offer to beat Tyson's. Investors and analysts certainly see the potential for a bidding war. In fact, shares of Hillshire surged on Wall Street today, indicating investors see this company fetching a higher price. For Nightly Business Report, I'm Sarah Eisen.
Still ahead, Apple shares rallied today on news of its Beats acquisition. But does the company have a new innovative product in its pipeline to get investors really excited?
A French bank may have to pay a hefty fine for ignoring tough U.S. economic sanctions against Iran, Cuba, and Sudan. The Justice Department is pushing BNP Paribas to pay more than $10 billion to settle those allegations, which would be one of the biggest penalties ever imposed on a bank. BNP Paribas is also negotiating with U.S. banking authorities over whether it could lose the ability to transfer money into and out of the U.S.
A bunch of other banks may be in trouble for possibly overcharging the U.S. government on foreclosure fees. The U.S. Attorney's Office in New York City is investigating whether Uncle Sam was charged way too much for expenses incurred during foreclosures on federally backed home loans. The banks that have already received subpoenas: PNC Financial, PHH Corp, MetLife, Santander Holdings, and Citizens Financial. This is a unit of Royal Bank of Scotland.
Earnings season may be winding down, almost over, in fact, but warehouse club operator Costco reported its latest quarterlies today. Sales were up, but so were costs. And with the retailer's profits getting squeezed, could prices be heading higher too? Courtney Reagan has more.
Running a retailer is an expensive task. Add in foreign currency and gasoline price fluctuations, as well as membership fees, and it becomes an even more difficult business model. Warehouse retailer Costco reporting disappointing quarterly profit, bogged down by higher expenses. It's the fourth straight quarter Costco has missed Wall Street's earnings expectations. But analysts see it as one of the stronger retailers out there. Revenue took hits from weak foreign exchange rates and lower prices at the pump. Profit is getting squeezed as Costco faces higher merchandise costs, though shoppers may not need to worry about seeing big price hikes. On the earnings conference call, CFO Richard Galanti said the cost of its popular rotisserie chicken has dramatically increased, but Costco hasn't passed the price increase on to consumers. Though generally, Janney Capital Markets analyst David Strasser says Costco does pass on higher costs to consumers, though slower and to a lesser degree than other retailers, so it hurts shoppers' pocketbooks a little less.
There's a lot of moving parts here. You know, taxes were a little lower, expense was a little higher, sales were fine. I mean, do I think anything was going on here that's unusual? I don't. I still think Costco is the best retailer in the world. I think anytime you can buy Costco cheaper than it is the day before, you should. And I think they're still running the business really, really well.
While the quarter wasn't the brightest one for the warehouse retailer, it's not enough to deter analysts. At least 4 reiterate their recommendations to buy shares of Costco. For Nightly Business Report, I'm Courtney Reagan.
The people who run Google have released a rare and not very colorful profile of the company's diversity. 83% of Google's tech workers are male and white. Women account for only 17%. But in terms of racial diversity, black workers account for 2% of its U.S. workforce, Hispanics another 3%, and 34% are Asian. Google and other tech companies have been under pressure to release diversity data.
If you think you've seen the best from Apple, well, think again. The maker of the iPhone, the iPad, and Mac products could have something even juicier in its product pipeline. An Apple executive dropped the news bombshell. It was heard around the world.
We're not smart enough to do 100 great things. We want to do a few really incredible things, and we're focused on that. And that hasn't changed. And it's been, you know, keep going down the path we're going of building great products. And, you know, later this year, we've got, you know, the best product pipeline that I've seen at Apple in my 25 years at Apple.
Some claim, but can the company live up to that bold statement? Here to talk more about it is Andy Hargraves. He's Senior Research Analyst with Pacific Crest Securities. Andy, welcome. Good to have you with us. Let's start with the Beats deal. Apple paid a lot of money for some headphones and for a streaming music service that is nowhere near the top of the heap so far. How do you grade this acquisition?
Yeah. Well, you grade it on a few different levels. I think financially, I'd give it a pretty good grade, actually. It's headphones, but they're really expensive headphones that probably make very good margins. So I think the multiple that they paid on the hardware business is probably pretty attractive. For a strategic kind of vision, I would grade it fairly low, primarily because Apple needs really, really big markets. And music is a large market, but on Apple's scale, I would have hoped to have seen them try something bigger.
Andy, I want to ask you about that soundbite we just heard from Eddie Q. Best product pipeline I've seen at Apple in my 25 years at Apple. Do you buy the hype?
Yeah.
Or is it for real?
Well, that sounds pretty aggressive. I would say the product pipeline they had in early 2007 was probably pretty tough to beat in the history of consumer electronics. Even for Apple now, you know, they'll probably have a couple bigger iPhones, and maybe that's what he's referring to. I'd be really surprised if you had anything sort of similar to what we saw in 2007 in terms of impact to the company, though.
Tell us how you view the stock right here, Andy. I noted today that the stock is trading at its highest level since I believe it was the fall of 2012. It's up there pretty high. Where do you think it can go?
Yeah, our price target's $650, and that's based in large part off of optimism around the iPhone 6 cycle. Quite honestly, once you get into that, I think we're going to be faced with pretty significantly decelerating and possibly even declining profit levels again. So we like it right now. We like it into the iPhone 6 cycle, but unless they launch some pretty massive new product or service between now and then, we'd be more likely to be sellers above that 650 level than continuing to take our target up.
And that's not so far from where it is today.
It's not so far from where it is today, no. It's been a good stock.
Yeah, it's at 635 now. Well, let's talk a little bit about the future. On Monday is Apple's World Developers Conference. Usually they don't say too much to move the needle, but are you expecting Tim Cook, Apple CEO, to say something that's really going to pump up the volume and enthusiasm for Apple investors?
Yeah, not really. There's always the outside chance, and management certainly has been effusive, I guess, in their praise of the pipeline. So maybe they come out with something that surprises us, but I'm not expecting a whole lot. I'm expecting it to be mostly software updates that people are fairly well aware of at this point.
You know, they still have very good share in the smartphone market, particularly in the United States, but Samsung has certainly nibbled at that business. They have not been blowing away the music world since streaming has come on with Pandora and Spotify and others. Is this company as innovative as it was 5 years ago?
Well, I think so. You know, I think part of the issue and part of the knock on them not being innovative is they're rhino chasers, you know, or they're unicorn chasers, something even more rare than or bigger. You know, you had the iPhone, you had the iPad, and it's just really, really hard to come out with products that address that big of a market and have that big of an impact on the world. And I think they try, which takes a long time. So, you know, I think it's still an incredibly innovative company. I don't knock them for that. I just think it's a really big company. It's hard to move the needle at big companies.
All right, Andy, thank you very much. Interesting conversation. We appreciate it. Andy's with Pacific Crest Securities.
Shares of Abercrombie & Fitch popped after the teen retailer announced a smaller than expected loss, and that's where we begin tonight's market focus. Revenues fell slightly, but were still better than analyst estimates. And looking ahead, the company stuck by its full-year earnings forecast. The stock rose almost 6% to $37.14. A healthcare deal in the news today. Healthcare facility operator AmSurg is buying the physician outsourcing service Sheridan Health in a deal valued at nearly $2.5 billion. Now, AmSurg says the combined businesses will have a total market value of about $70 billion. Its shares rose about 7% to $45.74. Sheridan is a privately held company. A cloud computing deal could be in the works between Microsoft and Salesforce.com. Reportedly, the two are in talks to let Microsoft's cloud service customers use Salesforce relationship management programs. Shares of both companies rose in today's session. Microsoft up a fraction to $40.34. Salesforce rose 2% to $54.40.
Well, Susie, if you're a Dish Network customer, you will soon be able to pay your bill in Bitcoin. Isn't that good news? The satellite TV operator says it would be the biggest company to accept the virtual currency as payment, which it will start to do in the third quarter. So get your Bitcoins together. Shares rose a fraction to $59.55. Express reported weaker than expected first quarter results. Especially apparel retailer also saw its same-store sales shrink, and it gave weak guidance about future results. Shares fell sharply after the report. During the regular session, though, the stock was up a bit to $13.63. Another miss after hours from Lionsgate Entertainment. That company saw its revenue decline 8%. That's despite strong contributions from the movie Divergent, which premiered 10 days before the end of the quarter. Shares tumbled after the close. At the close, the stock was up more than 2.5% to $29.53, but you see the fall off on that chart.
The interview this week with Edward Snowden by NBC News, which included revelations of NSA surveillance on a number of foreign countries, is drawing a big response in China. Eunice Yoon tells us why China's reaction to the Snowden interview may be cause for concern for the American business community.
Edward Snowden's interview is being played up in China. People here are calling him a patriot and a hero. A government spokesperson said that Edward Snowden only exposed what many people here already suspected, that America is the biggest cyber spy and adheres to double standards. This comes after the U.S. Justice Department indicted 5 Chinese military officers to highlight the American perspective, that spying on governments is one thing, but spying to steal corporate secrets and give your companies an advantage is unacceptable. That distinction is lost in China. It's an economy dominated by the state. The question this week has been, how much can China retaliate when it wants American know-how and the two economies depend so much on each other? The state press has started to soften its tone, including commentaries running counter to the outrage, saying that the row over the cybersecurity shouldn't undermine the overall relationship. Still, many in the American business community are concerned about retribution. There are reports that U.S. consultancies and American tech firm IBM are under threat of losing business for state-owned companies. Cisco has also been criticized by the state press for being complicit with the U.S. government on cyber spying, accusations that Cisco denies. The Chinese government said that it's vetting foreign technology companies here on security concerns at a time when many U.S. tech firms say they are already facing a very tough environment in China. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Coming up, the biggest annual meeting for cancer doctors gets underway tomorrow, and there is one topic that is expected to dominate the conference. We have the details next.
An important safety warning about tanning salons and skin cancer. The Food and Drug Administration just announced that sun lamps used in tanning salons must carry a black box type warning label stating that they should not be used by children under the age of 18. And marketing materials must include information about cancer risks to adults, urging repeat customers be checked for skin cancer on a regular basis.
British pharmaceutical giant GlaxoSmithKline has reportedly approached a handful of private equity firms in hopes of getting some bids to buy some of its older medicine brands. GSK has about 50 drugs in what it calls its established products portfolio, including heartburn drugs like Tagamet and Zantac, which have lost their patent protection. With tough competition from cheaper generic rivals, Glaxo has been looking to sell off some of its older drugs to focus on more lucrative new ones.
Big pharmaceutical companies, along with Wall Street investors, are gearing up for one of the biggest events in the industry, this weekend's annual meeting of the American Society of Clinical Oncology. It gets underway tomorrow in Chicago. And as Meg Terrell reports, there's one subject that investors will be paying close attention to.
ASCO is bound to move stocks through early next week on data being presented there. Analysts say the key theme will be immunotherapies, drugs that harness the immune system to fight cancer. So how do they work?
Immunotherapies can work in different ways. Some involve harvesting a patient's immune cells, specifically the T cells best equipped for attacking cancer, multiplying them, and then reintroducing them to the body to fight that cancer. Another technique takes T cells out of the patient's body and recodes them to be better cancer hunters, then returns them so they can find and destroy cancer. Other immunotherapies are medications patients take by intravenous infusion. Some help boost immune cells so their attacks pack a heartier punch against cancer cells. Others help immune cells see the enemy, revealing invisible cancer cells so immune cells can identify the target and attack.
Companies working on these therapies include Bristol Myers, Merck, and Novartis. Smaller companies like Juno Therapeutics and Kite Pharma are also in the space. Analysts say for Bristol Myers alone, the drugs could bring in $13 billion in peak annual revenue. And this weekend will give us another glimpse at the promise of these medicines. For Nightly Business Report, I'm Meg Terrell.
Nearly 1.5 million more vehicles are being recalled for safety concerns, but this time, Ford is the company involved. Most of the affected late model cars, 900,000 of them, are Ford Escapes and Mercury Mariners for a potential problem with the torque sensor inside the steering column. Also being recalled, 200,000 Ford Explorers for a power steering issue, along with 200,000 Taurus sedans for a corrosion problem, and other models are being recalled to update the floor mats.
More trouble may be just down the road for General Motors over the recall of 2.5 million cars with faulty ignitions that have been linked to at least 13 deaths. Just today, congressional investigators say they met with a suspended General Motors engineer who was involved in that massive recall but was pulled off the job back in April, along with a handful of other GM employees.
And finally tonight, a little bit of welcome news for General Motors after it has recalled about 15 million cars so far this year. Only 8 vehicles earned a superior rating for their collision warning systems in tests conducted by the Insurance Institute for Highway Safety, and 4 of those cars were made by General Motors. That includes the only non-luxury make in the bunch, the 2014 Chevy Impala. The others topping the ratings, the BMW 5 Series, the BMW X5, the Mercedes-Benz E-Class, the Buick Regal, the Cadillac CTS, the Cadillac XTS, and the Hyundai Genesis.
So they're doing some things right over at General Motors in Detroit
Those avoidance
City.
systems are amazing.
And that's Nightly Business Report for tonight. Thanks for watching. I'm Susie Garrow.
I'm Tyler Mathisen. Thanks from me as well. We hope you have a great evening, and we'll join us back here tomorrow night.
I'm Susie Garrett with the Nightly Business Report News Brief. On Wall Street today, a new record for the S&P 500. It closed at a fresh all-time high, 1920. This happened despite the U.S. economy contracting 1% during the first quarter of this year, with wicked winter weather getting the blame. But investors were unfazed, encouraged by optimistic comments from economists saying growth right now is strong. Also giving stocks a boost, a sharp drop in first-time jobless claims and a modest increase in pending home sales. The Dow rose 65 points, the Nasdaq up 22, and the S&P added 10 points. And a bidding war in the food business. Poultry giant Tyson Foods is offering $6.8 billion to buy Hillshire Farms, topping an offer made just 2 days ago by rival Pilgrim's Pride. Be sure to tune into Nightly Business Report right here on your public television station.